Imagine this. You had just $100 to spare 4 years ago. Not a life-changing amount, right? But what if you split that $100 into 5 popular investments? Stocks, crypto, real estate, gold, and index funds? Now fast forward to today. One of those investments could have made you feel like a genius. Another might have left you wondering, what was I thinking? The results? They might completely shock you, because in this video, we're not just throwing out numbers. We're breaking down real returns, real risks, and real strategies. So you can learn how to start investing wisely, even if you're just getting started. And trust me, you'll want to stick around till the end, because the best investment isn't always the flashiest one. Let's rewind to 4 years ago. You've got $100 to spare. Maybe it's a tax refund, a birthday gift, or cash you saved from skipping Starbucks for a month. You decide, I'm going to invest this. Now, most people would go straight to stocks. It's what we hear about on the news, right? Let's say you picked a popular company like Tesla. Well, buckle up. That 100? It could have grown into over $200. But there's a catch. What if you picked a stock that sounded promising but tanked? Just ask anyone who invested in WeWork or Blockbuster back in the day. You might have ended up with just a few bucks, or nothing at all. Stock investing can be powerful, but it's risky if you're guessing. Now, what about real estate? Well, most of us don't have the money to buy property. But there's a way in. REITs, or real estate investment trusts. They allow you to invest in real estate without ever owning a home, collecting rent or fixing toilets. Over the past 4 years, 100 in REITs could have grown to around 160 or 180. Not bad, but here's where it gets better. Dividends. That's passive income, money paid to you just for owning the investment. Let's move to the wild side, crypto. If you threw $100 into Bitcoin or Ethereum during a dip, that could have grown to $1,500 or more during a bull run. Insane, right? But here's the downside. If you bought during the hype and panicked when it dropped, that same $100 might now be worth just $15. Crypto is the definition of high risk, high reward. It's not just about what you buy, it's about when and why you sell. Now let's talk about gold, the safe haven. It doesn't crash like crypto, but it doesn't skyrocket either. 4 years later, your $100 in gold would be worth around $130 to $140. Slow growth. But in uncertain times, gold protects wealth. It's like financial armor, not a sword. Finally, we have the quiet workhorse, index funds. They track entire markets like the S&P 500. So instead of betting on one company, you're betting on the entire economy.